India's finance ministry has released its latest monthly economic review, and the message is cautious resilience and not unchecked optimism. The numbers tell a very mixed story. Strong services exports, healthy foreign exchange reserves, and also a stable labour market are giving the economy a pretty solid foundation. But the report also flags some real risks such as elevated global energy prices, a depreciating rupee, rising upstream cost pressures and worries over a below normal monsoon season. So let's start with oil. Brent crude averaged about $120.4 a barrel in April before easing to $108.3 in the month of May. And that's still a geopolitical risk premium that is baked into prices, with West Asia tensions being the key driver. Low oil helps India's import bill, but the relief is only partial for now as the price is still above the pre-war levels. And then there's the rupee. The currency has weakened roughly 4.9% since the West Asia tensions began, and the finance ministry's own framing is pretty interesting. Now, the report argues that the currency fall is not a sign of economic weakness, but it reflects as to how global capital is concentrating into a narrower set of sectors and countries. In real effective terms, the currency had actually become overvalued by late 2024, making Indian exports less competitive. So the government suggests this correction has a silver lining for trade competitiveness. On inflation, the picture is more reassuring. Price pressures are largely being offset by the base effects, meaning year-on-year comparisons are flattering, even as month-on-month costs continue to creep up, particularly in the energy and in the transport sector. Now, one bright spot that is worth flagging in the report is defence manufacturing. India's drone industry alone has generated close to 3,000 crore rupees, or about $316.6 million in FY26, and total arms exports have jumped 62% year-on-year to over 38,000 crore rupees. Now, that, of course, is a sign of diversification beyond the usual growth engines. The bottom line is that India isn't immune to global shocks, but it's absorbing them better than most. The real test comes in FY27, where monetary, fiscal and structural policy will need to move in lockstep to keep growth on track and inflation anchored.